How's everybody doing today? Hope this video finds you well. Within my group of traders or community of traders, whatever you want to call it, I've been getting some questions recently about the way that I trade, trades that I've taken. Um, and so I just want to go ahead and try and make some videos, do the best that I can, because I've never, made videos or anything informative like this before, but wanted to give it a shot, try my best, and try and help some people out. Also be able to hold myself accountable, and try and make myself better and be able to give more informative videos. And um, I've had one friend also push me to make some videos, and yeah, just wanted to give it a shot and try and help as many people that I could. Um, but you know, especially now that I'm confident in the market, go off my own ideas. Don't go off what anybody else says. Just particularly look at what I'm seeing, and there's one other person I'll talk to, but that we're colleagues. We talk back and forth, so that's to be expected with people you learn from, and you should be able to have somebody that sees the same thing that you see, and sometimes you can share ideas back and forth. But anyway, today I wanted to go over some trades that I've taken, as well as the basics of turtle souping, which is the way I trade. Um, I won't necessarily be going over draw and liquidity today, but with order flow and pretty much turtle souping, it's the start of a reversal um, to the draw and liquidity. Um, and if you see where liquidity is being induced, where liquidity is engineered, eventually having that eye is not the hardest thing in the world. Becoming the hard, or personally for me, becoming the hard thing is executing um, to perfection, like I want to do, upon those trades and upon those ideas and stuff like that. But yeah, so that's what this video is going to be, is mainly the basics, just the simplicity of turtle souping, not the basics of ICT. We're not going to be going over what a fair value gap is, or any stuff like that. But if you understand ICT, like many people do nowadays, a lot of these terms and some of this should be pretty simple to you. And if it's not, you can put questions below, or I have a playlist of the basics. You know, uh, Even stuff down to baby pips. I have a playlist of. But we're gonna go ahead and get into the high time frame. You can call it swing trade, intraday, or not intraday, but just a normal trade. I don't know, whatever you want to call it. I'm not too particular about terms because it's all the same shit. We're just trading. Um, but certain terms are particular, obviously. But for whatever, calling it that, it doesn't really matter. But yeah, this is our trade. We have the sweep of the sell side level into our key level. Um, we react, wait for a reaction, get in, form a breaker here. Some people say, oh, this is our breaker. We're gonna go lower now, but we see things a little bit differently. That's our breaker here, our true breaker. Our some say you have to have an SMT to have a true breaker, but it all just depends with order flow and exactly where we are. Because at the same for the same trade, we could have been looking for NQ to SMT down here, while ES is coming back to the wick or the order block or whatever, blah blah blah. But off the reaction we got from my key level, which we'll show here in a second. Got a breaker. We react back to the order block. And we go ahead and finish our market maker model, and may continue to take this high. We'll see what happens. But yeah, we're gonna go to the chart, see what we're seeing. Do like we do. Go from our highest time frame down to lowest time frame. We're not gonna go over the monthly or weekly. We're just mainly going to go over the daily, what we're seeing there, um, and go from there. Weekly, we can get into days of the week and weekly profiles and stuff like that, and we can make a whole video on that alone. So we're just gonna stick to the basics here and you know just go from there. Um, so we're gonna back out of here and go to our daily time frame and see that we have a range or an accumulation. All right, where and what is our range? So we see here have this breakup, and we have a kind of couple candles. We don't really, we have a wick above here, which could be seen as a bearish turtle soup, but depending on how you want to see order flow and how big of a risk you're willing to take in the market, this is the trades we take, or I say we, but this is the trades that I'll take versus trying to short the top when there could be a reason to, could not be a reason to. This really wasn't a terrible turtle soup. Um, some people taking it, or some people took it. Myself, I didn't really short for something like I did with the trade that I did here. But intraday and short scalps, we were taking these down. Um, but anyway, just sticking to the basics with order flow and draw on liquidity. I'm not gonna teach something like that when this is more of a textbook turtle soup. So we're gonna slide this over here one. So we have the top of our accumulation, top of our range, low of our range here. So from there, we see our range, we see our sweep this, come back into 50% of the range, and then just kind of chopping up and down. All right, we come down, break below, and close below into the daily fair value gap. All right, so we'll mark that out. We're going to mark from the bottom of this wick here because we have a candle close here. Some people like to mark here. What we're going to do is go back to our what we normally have it as. And what I like to do, make the chart a little bit cleaner. So you're coming over here, setting our fair value gap. We've already, you can say, mitigated this part of the fair value gap and looking for the sweep into here. And then this is going to be our, pull this here so we can see the top of our wick. We're going to leave this area marked because, obviously this is our fair value gap up here, but our range is also within that area, so it's not really a key area. So obviously we have an expanding market. Market stops, we start ranging, accumulating, whatever you want to call it. Break below into our key area, and what we call dumb money is looking for sells here. All right, what smart money's doing is pairing those sell orders with their buy orders. Okay, smart money's gonna be pairing their buy orders with dumb money's sell stops. Okay, gonna go down to the 4 hour. See that we're coming into what's also going to be a fair value gap here. We have the BPR, so whatever, you can mark it like this, whatever. We're going to keep it as the daily fair value gap. And obviously that wasn't perfectly straight, whatever. But I'm not going to be going over order blocks, breaker blocks, blah, 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 blah. But from our 4 hour, we have a long wick Long wicks can be good, be bad with order flow. Depends, but sometimes we like to see wicks because wicks will get filled all the way to and through. Obviously, you have these two long wicks right here, and safe to say we filled them to and through. We'll see in my trade here that comes up next. Just a simple Asia scalp. A lot of people don't even look at the Asia session, but um, I don't know, something about it. Holding for 40 minutes to make $2. Can't beat it. But anyway, I'm gonna go back to the 2 hour, is which where we saw the trade, and what I have marked out here is the order block, or it's the lower time frame order block. But anyway, the we have the VI marked here as well as the 1 hour order block. Okay. So obviously you can try and guess the bottom. Keep setting a sell stop. I mean, or yeah, sell stop. But that's just stupid. Okay. You can wait for confirmation and have a way higher win rate. Have just as good RR. And just be even more safe and keep yourself safe within the market. Because if you put your money trying to long this wick, if you put your money in there, the market's gonna take it. Um, so it's definitely a key takeaway with it is, low time frame. It might just, do like this and blast away from it within the hour. That could be within 15 minutes. Um, but that's where whatever you want to call it, FOMO kicks in. That psychology kicks in, whatever. Um, you keep your trading plan in place because it's fine to come above this high and then retrace back down. That's how we engineer liquidity. That's how we get trap people in certain positions, and just that's how we have dumb money. um 1 second, gonna take a drink here. Okay, so 4 hour time frame, we had a closure within our wick. Some will call this rejection block. It's not the perfect rejection block. um Technically, I like the daily rejection block. Some people will label rejection blocks wrong, and it can, you know, can can really hinder you. Um, it's very probable to mistake a high probability PDA and a high probability turtle soup because you're too zoomed in on the 1 minute or the 5 minute, even the 15 second. It's perfect to trade the 15 second. If you're in right here on the wick, and um, the SMT's looking perfect, time of day is perfect. Even the second you're in the trade is perfect. If it all aligns, it all aligns. Especially on that 15 second, which is I'm not going to be teaching to use if you're new to turtle souping, because you simply don't need to be on it. Um, but yeah, we're gonna get back down to the 2 hour or the 1 hour, excuse me. So on the 2 hour and the 1 hour, we have a VI 1 hour order block. Gonna go down to the 15 minute here. And I can't remember exactly which candle I got in on, but may have been this one. But it was probably somewhere. We're not gonna make it perfect. I'm not gonna be, say I was in down here. There's screenshots of it and where exactly my fill was, but um, yeah, we can just say we have our order block here, bam, and we're in. Go down to the 5 minute, just to be precise. All right, we have our breakaway gap here, BPR, come down, form this, I'm probably in here on the order block. Okay, somewhere, we'll say in the fair value gap, because I think that's quite close to where it would be at. Um, and this is when it, doesn't even become turtle souping, but it becomes more of trading regular. But you're still also in the high time frame turtle soup, which makes everything more high probability. You're also at the reversal, which can be super scary for some people. But if you're reading order flow correctly, there's no reason for us to go lower. Um, so even if you're in on the breaker or the fair value gap order block, whatever you want to call it, um, you know, in here we'll just keep the box. Um, you know, Friday ends, chop around a little bit, come down, stops below here. Let's go back to the picture just to make sure. Don't think I put my stop loss on here. Well, that's unfortunate. Anyway, we'll just say stop below this low because that's our order block candle. Oops. Okay. Thought I had a template saved, to be honest with you. Okay, sorry about that. But now we go back down to the 1 hour. We break up breaker, and with the keen eye, you can go ahead and see what we're forming here after we react from the order block and almost create a soup here. Just depends how you want to look at it. Break below, form an order block, high probability, technically not really, but leaves a fair value gap into the key level order block. We react off the order block, inversion, blah blah blah, breaker, come back into the candle close, and then we're off. And how do we react so heavily? Because within the longer range, within the whatever bigger range, whatever you want to call it, where's our PDA? Right at OT. Miss it maybe by a little bit, but depends how you want to put your ranges. If you want to put them at candle close, which I've seen some people do, you react perfectly off of it. Keep an eye on your OTE entries. A lot of people don't say OTD that often, but it's very important. Also with this turtle soup here, we have an SMT divergence, but just gonna say SMT. And if we want to pull that up over here, show you that. And even this sell side level down here, which low is, I'm pretty sure it's this low. Yes. It's gonna be the Friday. Yep. SMT here, and we in sync here. Well, actually, we aren't in sync. I'm pretty sure we had an SMT here. Could be wrong, but I'm pretty sure with this candle in the BI, which is also an NWOG, which is a new week opening gap, we have an SMT as well. So this is all confirmation that we're gonna go higher. And don't, not to state the obvious. Obviously, you're not going to catch every high time frame turtle soup, but you can easily have a good bias, a good weekly bias down to a daily bias, to a 4 hour, 1 hour bias. Have all your time frames alignment, or have all your time frames aligning, and I mean, just bang out a trade. We're going to show how this open could have worked perfectly for that into the SMT. I'm going to pull this back up over here so I can see perfectly where it's at. Put this back over here. Yeah, perfect. So just like I thought, we had a SMT into the N log after a high, high time frame SMT. We have here, do all time frames align as well as their SMT? We have a high time frame PDA into a high time frame SMT, right? Within order flow, a breaker, come back down to react off the order block, wick, rejection block, whatever you want to call it. And also the key to the coming back to the rejection block is we didn't do it, you know, like this. Rejection block, a couple candles later, and oh, we're in the wick, but it's gonna get filled too, and maybe through. Just depends with the SMT, but not here to just state the obvious. So we're gonna keep going up, but it's always how high. I'm not here to catch a top, catch a bottom, do all that. I don't really care about all that. I'm here to trade first and just trade what I see, and I'm also here to make videos now just to try and help people, but that's not as important because I'm trading first. That's my main goal. As should everybody's be. If you're coming to do this, it should be your goal to be the best trader. And okay, yeah. Don't mean to be unorganized. Kind of, keep in mind it's the first video ever, so not trying to yap or just go on and on and on, but trying my best to stay on topic and go through a certain amount of things I have listed. Um, but yeah, want to go back over to the ranges and the accumulation, because you can see here we have a lot of smaller ranges within the bigger range, and these accumulation ranges can turn into market maker models, or also just see when we sweep the range high, come back to 50% of the range and then the range low. And then as you see here, we go through the range low, back to 50%, and then, right back to the range high. It's just rinse and repeat, rinse, repeat, rinse, repeat. Just don't get trapped on the wrong side. So you see here, range high, sweep, 50% somewhere right here, probably PDA, but then, we break it, come back into it with this long wick, and probably, I think we SMT at this low right here, with this candle as well, and we SMT at this low as well. Now, honestly, with this range being already created, we come in, we SMT at this low, close within the wick, bam, form a pretty good 2 hour rejection block, leave a fair value gap, also create an order block, closure of wickless green candle up, create equal highs, kind of just chop around, and then we go higher. Okay, we don't break this high. Let's see if we might have SMT'd at the high, because I don't have this one marked out. we go ahead and SMT into looks like a BPR. Actually, the breaker. So we'll go ahead and pull this up and show it to you. And oh shit, it's gonna be the March 24th high, or the 5th high. So we SMT here into the breaker, then we continue lower. So, with certain trades, you don't always want to expect to take a buy side or sell side level, depending on what time it is, or just certain, more basic levels than just the turtle soup. And, we're not going to go into getting out at certain mitigation levels and, such as like this, you sweep and then react to an order block. You would love to be out below this low and then get back in here instead of holding through all that. But that also goes with order flow because, we're shorting. And then look how fast we, go up instead of down. But obviously with us being at all-time highs, we're taking the stairs up a higher time frame right now because this is just chopping around, and we're gonna hopefully take the elevator down soon, and I'll be on that ride. But yeah, range high, 50%, range low. Okay, so then we can even break this down into a smaller time frame. We want to do I'm gonna do one that's really obvious. I'm just gonna mark all of them. Try and help y'all out a bit. Kind of just see exactly what I'm seeing. Probably be more obvious. It's a little more obvious. But anyway, I don't want to say we can almost guarantee that we SMT'd this, but this is gonna be the March 14th. Wow. I mean, seriously. Come on. Just been yapping. I mean, it's once you see it, you see it. Oh, actually marked that wrong. Okay. So, ES being the stronger pair, we SMT to the upside with ES, SMT to the downside with NQ. Put that in your notes. And just note that with these, it's not gonna be all the time, but just with the market we've been seeing, um, ES is broken all-time highs. I mean, a couple times now. Looks like it just keeps going, and NQ obviously looks like it wants to range. Um, but with that being said, and every candle being a range, we have our 4-hour sweep of the low, come back up, SMT at the high, which would then be our turtle soup continuation, back into a reversal. I'm not going to get into breakers or breaker deviations, which you're going to see in the trade coming up here in just a second, but can also guarantee some of these are at a 4 deviation or 2.5 deviation, just depending what specific breaker and um, what time frame you're on as well. So um, oh yeah, I'm sorry if I'm, like I said, sorry if I'm unorganized, but we have our accumulation, 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 bam, accumulation leg. I know it's below this accumulation, which is not typically what you see in a market maker model, but we also have our breaker higher. We're with order flow, high time frame PD array. High time frame has more value than the low time frame. Low resistance liquidity. Bam. And you know, see what we can do here. See if we can break this high. Um, Also with this, we can technically, if you want to, go into a little bit of time, but it's nothing too serious. Just go back so we can go low time frame. So we see during London open, we're just ranging within the range. We sweep this high, break to this low, respond to this order block, and then sweep the Asia range into probably an SMT into this, what looks to be probably a 5-minute or 15-minute fair value gap. So you see we're in bearish order flow, short term bearish, long term bullish. Come into pre-market, we have our accumulation, manipulate down, and hindsight you can say accumulation manipulation, but whatever. We're just gonna go with what we see. We're chopping. We'll go to a 5-minute here. Low resistance liquidity, so probably gonna take it out with the most obvious fair value gap being here and then here. Okay, and these low time frame fair value gaps technically don't matter to me as much because we have the NWOG right here as well as some equal lows. Okay, so we see how we react. Open candle, which is an open low. Let's see which candle it is. Probably a 4-hour open low. Yep. Anyway, open, low, high, close. So going into pre-market, we have a run up right before open. We drop, sweep the pre-market low into our key level. See how we didn't hit it, and the NWOG down here. Okay, and I'm pretty sure this is marked previous day low for Tuesday. Yeah, which would be for, oh yeah, glad that updates. So yeah, we sweep previous day low as well. Which if you don't know your highs, your previous day highs, lows, liquidity levels, I would start noting that. See how that can affect your draw and yeah, just even a closure above previous daily close or close under. So we have our order block candle. See what looks better here, 15 or 5. We'll go with just a 5-minute. Sweep the low at 9:30 open. Have a breaker up after the order block. Come back, respond to the order block. And what would have been even better if, let's see. Let's just see real quick. dumb as hell. Of course we have the SMT. All right, anyway. So we have our SMT as well. And then probably on the 1 minute, we may have had ES taking a low, or YM. But that it doesn't have to take the low. Okay. Obvious fair value gap. I should have marked that beforehand and said turtle soup that. Damn. Whatever, whatever. But we're in here on the order block anyway. We have a confirmation. Start ranging. Have our range high, range low, sweep range low. Okay, I'm not gonna buy whatever. Sweep range low, buy it right here. You can even get out here just to scalp intraday, and you get in, wick out, and you're out. Okay, and that's a simple, you have your stop below this low or just below the fair value gap or the breaker. So you'd also be in at the order block. You can pyramid here, dump some of your contracts, and just hold until we, you know, clean out this market maker model right here. Sorry, going fast with it. I just now noticed that. We also have the accumulation, manipulation, distribution, which is a double manipulation cycle because this distribution down is a manipulation. Some some people like to call it a power of five, whatever you want to call it. You now have your breaker, and if it wasn't hindsight, I can guarantee we run this high. But as you know, we're going to. You can even pyramid in here, which would be a decent entry. And there's that high. Obviously, it's Tuesday, so you have your manipulation day of the weekly cycle. Tuesday low of week. All right, just gonna close this, whatever. And then we have more. If you see the higher time frame, then the low resistance, equal highs, blah blah blah, which is that previous day high. And you yourself caught the whole day range. Oh, we can get in here. Oh, went into the next day. Whatever. We already know how the day reacts. Oh, does it break that low? I think we have some tea there. Whatever. And we'll get there any day now. You see the equal highs are building low resistance. And see, even now, I know we're not going to break this low resistance. So I can switch to the 15 handle. Awesome. Oh, we might. Probably SMT'd here, or, like we said, build low resistance liquidity. I don't like seeing equal lows, but it plays out. Oh, I forgot FOMC was this week. Alright, let's just open. Had a big open, but I forgot SMT was, or FOMC was then. Oh, I forgot it went straight up. Whatever, it doesn't matter, because trying to guess hindsight, but not really hindsight, but just showing you order flow into low resistance, blah blah blah, with the market maker models. You can call it hindsight. I took some of these trades live. I'm not gonna pull all the screenshots out of my butt to, prove something that doesn't really matter. All that stuff doesn't matter. I'm just trying to show you to, help you get more keen of an eye to what I'm seeing and what a lot of the turtle soup traders are. We're gonna go into the trade recaps now, or the second trade recap, excuse me. Okay, so if you haven't fallen asleep yet, we're gonna go over, this trade. This is a pretty quick one, and then we'll show the other one pretty quickly as well. Just so this hopefully doesn't make it over an hour, but it doesn't really matter. So I have all this listed. This isn't like talking about here. It's talking about this one wick. you'll see in the next video exactly what I'm talking about with that. But what we do have after this was another SMT, so we have an SMT breaker, which is a high probable breaker after sweep of a buy side level, but not a real sweep. This is a fake, obviously, to induce, um, you know, liquidity and engineer liquidity. Why I got in again. So we have our breaker deviation to 2.5. This is breaker deviation class. Sorry if that was loud, but this isn't breaker deviation class. But 2 to 2.5 is reversal zone, as well as, if you want to say 3.5 to 4 or whatever. I just use 4 specifically, because if it gets to 3.5, it hits 4. But we're just gonna, we also had an order block here. Or excuse me, this order block. We stab right into this candle, followed almost by a wickless green candle. I'm not gonna go over the super sauce behind that, but just pay attention to your wickless candles. Obviously during Asia session, there's gonna be more wickless candles, but like this, and even like this, but we get in on the SMT, watching ES at the same time, come up, create our order block, come back into the order block, fill the long wick to and through, and kick our feet back and wait for buy side to hit. Got lucky here, so we didn't have to wait an hour in Asia session, but yep, there we go. Pretty simple. I know it kind of went fast, but we see our order block come back, suit this candle low into the order block, do almost the same thing, but have a wickless green candle, inverse all this, fill the wick to and through, inverse, straight to the 1 deviation, whatever you want to call it. That was sarcasm because it's just a buy side level. STDs aren't the holy grail, but they're good. That's the only STDs we like are standard deviations. But yeah, I'm gonna let that play out one more time, and then we're gonna go ahead and go into the next one. This one shouldn't be. It's not as short, but yeah, I won't bore you to death with it. All right, and here's the second trade. This was, you saw the executions before, just before the previous trade. During the Asia session, or technically 1041. So some people call, I don't know what some people call it, but I call it the Asia session. But yeah, we're gonna let this one play out. As you can see, I got in a bit early. Reacting off this order block. Right here. It's kind of hard to see. That's what sucks about Asia session, but sometimes it's just obvious. So I'll hop on because don't want to say bored, but yeah. Anyway, I have an SMT at the low that I'm pretty confident about because of how ES is moving. Have a VI as well, volume imbalance, followed by a wickless green candle and closure within, our candle that we made the SMT with. Okay. We have a breaker. I did mark this as stay unfilled, which we see comes back and gets filled, but coming from a BPR breaker, unicorn, whatever you want to call it, it's not super low probable to not leave one, especially with this being here. Inverses will turn into, well, I'm not gonna say that, sounds dumb, but yeah, we'll either have an inverse or BPR form here, and if we break away from it, it confirms that it's a BPR and a breakaway gap. But as you see here is then when we have our SMT, not high probability. And why is that? Because we didn't sweep the buy side level. And I know we're on the low time frame, but especially in an ASIS session, but yeah, we'll we'll see here it was not a high probability one. And we go back 10 seconds. Mark our turtle soup entry into the volume fair value gap. Um, and like I was trying to mark wherever it was with the breakaway gap, we have it right here as we accelerate to the buy side level. And we see wicks in order flow get filled to and through. Yeah, and then we'll go to our last thing, which is just, some notes I have for the basics. SMT warrants reversal. Okay, went over that as well. We'll go more into depth the SMTs and even SSMTs. But I think it's good stopping point for one video. I hope I didn't miss anything I wanted to go over. Um, you know, kind of have it put to where it is now. So I think I'm just gonna post what we have, and hopefully, I don't disappoint myself watching it back and editing out the small little dumb parts or just when I start to stutter. I want to say sorry again for the unprofessionalism. I'll get better as I make a couple more videos and just get the grind in and the work in of doing it. Um, and then for order pairing, just for bullish circumstances, you can flip for a bearish. Smart money will pair their buy orders with dumb money's sell stops. So, they sell below all the lows, to see as a, breakout or, sell or buy below, or excuse me, buy above old highs as a breakout or sell below old lows as a breakdown or breakout, whatever you want to call it. Also, another keynote is that liquidity is engineered through failure swings and retracements. After smart money, smart money's orders are paired, excuse me. And then after your initial turtle soup, you don't just have to try and catch the bottom. As we saw with my trades, you're not catching the bottom every time. I have a couple trades where it doesn't bottom tick. I'm not worried about bottom ticking. I'm worried about having a plan, making sure my plan stays where I'm comfortable with and stays within the lines and parameters of my plan and my trading plan and my rules. And as long as it does that, that's all I'm really worried about. I can go a couple $100 and draw down, and be perfectly fine. Um, that's just the psychology you need to trade. You don't want to worry about making back losers. You just want to worry about trading the chart, trading your PN, or not trading your PNL, strictly trading the chart. Because when you start to trade your PNL is, when you get stuck in a cycle of, trying to make back your winners and then you're at break even after two trades and if you lose one and win one, you should be in profit. If you're 1-1, unless you have a 1-to-1 RR, which I don't aim for. Uh, I just don't think that's a good idea. Um, and not to say that you can't have a 1-to-1 R and have a great, win record and, you know, just take only good trades. I've seen that happen. Um, but, just how I like to trade normally is, just simple turtle souping. You can wait for confirmation. The confirmation be your high time or high time frame PD array, which a lot of people see as crazy, but that's the confirmation is sweeping that low, like we went into with the daily PD array, and sweeping lows and forming the daily rejection block into the 1 hour and 4 hour order blocks and so on. And kind of a sneak peek into the next episodes and more deeper into turtle souping, and kind of just into what we were talking about with our accumulation ranges and market maker models, that every candle is a range, and time is fractal as well. So, just how we were seeing those 4 hour accumulation ranges turns into 15-minute accumulation ranges we sweep the highs of, and then run to 50% range high, range 50%, range low. Um, and just as well as time is fractal, time is very important to your turtle soups. Just how we slightly went over in the uh, market open SMT soup, or may have been an SMT, but I'm pretty sure, yeah, it was into the in walk, um, responding from the 1 hour order block as well. So that trade just shows, how we can create an open Judas swing into an in walk, into PD arrays with an SMT. And I mean, you have no other option but to buy low, because what else are you gonna do? But yeah, really hope you enjoyed the video. If you watched it all the way through, I don't know. You can comment. I don't know. I love turtle soup in the comment section, but I guarantee probably nobody will make it here because it is a long ass video, and I am just one random person. But if you did get some information from this video, I hope you did enjoy, and I hope you come back for the next one. I will try to, also not yap as much, and just become, a better video recorder. ICT yap, so I know y'all don't need, another just person that sits here and just talks and talks and talks. But, try to make all my talking points informational, and, something that's relatable and something that's easy to pick up and understand. Um, but yeah, that's gonna be it for the video. Hope everybody has a great night, great week, great month. And I hope you enjoyed. Thank you.